Ladies and gentlemen of the crypto space, we're live on a Wednesday, March 20th at 11:31 a.m. This is a very important stream, a very important topic, a topic we touch on very often, but it's ever that much more important coming off the heels of a very ferocious meme coin frenzy. The emotions run wild, the potential fortunes to be made from worthlessness. The meme coin psychology is ever something to understand, appreciate, digest, and consider from a societal state standpoint. And much of that conversation is beating a dead horse. We all understand its degeneracy. It's a casino where the game is a relatively simple equation. You buy as early as possible. In fact, some of the meme coins, folks were able to buy the same block where you're literally inspecting the mempool looking for a deployment and you're able to add liquidity or make a purchase in the same block as deployment occurring. And it's a perverted reality where, yes, some have gotten lucky, and I speak to the majority. The majority lose everything, and the majority need a story about the crypto space that isn't bullshit, that isn't hopes and dreams. And while it's important, very important for society writ large to have hopes and dreams, it is very much a psychological imperative to pursue those hopes and dreams in a sustainable, rational way, in a way that makes not just your family proud, not just to respect your responsibility to your family and children, to respect yourself. There is no cap with hat. I got socks, cap with socks. Now, whiff and bonk charts look pretty interesting, actually. The psychology implies that memes are important, and there's a lot of staying power in a lot of them. And Doge is going nowhere, and you're going to have diminishing returns going forward. And psychology implies that these memes are entrenched in an interesting way at a societal level. You can speculate to a degree which ones become entrenched or not, but the few become entrenched, the majority profit or allow for an ultra minority, especially the deployer or the creator, to capitalize the most. And there's a much more rational inspection to make in these markets. Which meme coin is going to be the hottest? Now, that's why we talk about macro financials so much, because this space is filled with macroeconomic products and services. So rather than seeing or speculating which is the next hot, trendy meme that society is able to latch onto and begin to believe in, which is the foundational component of a money, is a belief system, which is a religious system as well, for that matter. You can latch onto something with rational ideas and rational, quantifiable properties, attributes that have historic precedence in financial systems throughout history, not just the status quo financial system, but financial systems throughout history. Then you could go further and say why these particular financial products and services are better. They fix things. They actually do good things. They would benefit society. And then you get into like there's altruistic aspects to the crypto space and where it benefits society as a whole. And then you get into meaningful things. And you take the long road and not the short road. But it's a hard society we live in where people are under financial distress. There's financial suppression vis-a-vis management of the currency, which they have failed at doing in many regards, but in also many regards they have been very successful. Everyone gets up and goes to work. There isn't systemic rioting. There is still a more or less consistent society where the status quo persists because they prevented the deflation. They prevented 20% of American corporations from going bankrupt and 30% unemployment. That's when you get your social unrest. The social unrest that comes from the downstream effects of finagling currency supply isn't the same as the deflationary effects. Deflation hits people right away. Inflation is the hidden effects, and that's what people are really latching on to tell stories about. Why, how money could change, and that's really the whole Bitcoin phenomenon. It's a big deal. I don't diminish it in any regard as being a better money. I would argue it is a better money. I don't know how well society at large would accept it because there'll be a lot of deflationary shocks associated with not being able to manage the currency the way Keynesian economics says to, or encourages, or really presents it as something that benefits society to 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 smooth out the business cycle. To smooth out the business cycle is basically credit expansion and credit contraction. It's the ups and downs of the cycle. So Keynesian economics says the central bank smooths out that process. But now society has latched on to the argument that that intervention is a perversion. So we have these memes we catch on to, and Bitcoin serves its purpose. Anyway, the long road versus the short road. The short road, we're coming out of a short road season. How many people fell off the mountain? You could probably have statistics on how many people fell off the mountain. And just anecdotally, the majority fall off. They try and take the quick road up the mountain and they go bye-bye. Take the long path, which I would argue is it's not just counterintuitive. It's the hard path because uh, people are under duress, and when you're under duress, you want quick solutions. That's why crime is prevalent, has always been prevalent, and quote unquote illegal activities are prevalent because they are the quick path to success. But there was a time when morals and education and productivity and honor was important, and that's still important in many societies. A good part of that in Japan, even even in the criminal aspects of Japan, there's an honor and a code, and uh, and I just you have to find it for yourself. What is the honorable way to serve yourself well with regard to financial management? And maybe even more importantly than yourself is your family and your children, which means a lot to many people because there's also a lot of people that don't have that to consider and they're only really thinking of themselves. But take the long road and be smart about things. So let's pull up where we're coming from good meme coin frenzy season. So which looks healthiest actually? Go figure. Bonk looks pretty interesting from a daily perspective. All of this shit is relatively new. You're talking about post at least 23, especially Bonk. Bonk is 20, late 23. But these are mean regressions. So this is a way that behaviors cycle throughout society. And that's why you see trend lines. That's why you see moving averages. And society behaves in very structural kind of ways. And this isn't even technical analysis. This isn't like Elliott wave. This isn't trends and patterns. This is just moving averages. And moving averages, as I describe them with regard to a premium or a discount, is generally the way society behaves. When things are below accepted moving averages, people instinctually perceive it as a region of discount. So a mean regression is a healthy process. And clearly, if you bought it at a premium, things regress to their average price. People hoping for a discount. And you can see if you don't deviate to the downside, if you're not all the way down here, people aped quickly and didn't wait for that significant premium. And that is an expression of support. That is an expression of directionality upward, that people didn't even want to wait for a discount. They were hungry for those prices and they accepted those prices. WIF is even higher from a time weighted average price on the daily. None of this type of inspection discounts further mean regression. It's imperative that we talk about macroeconomics briefly, and I'll get to it in a couple of minutes. Um, but you can see very nice moving averages from a bonk and whiff standpoint, and you don't know where things are going to go. So that's why it's imperative to have something more than price to go on, more than social consensus to go on, more than these moving averages to go on. And that's why we talk the way we do about financial products and services, because that's the more. What is the potential significance of a product and service? Because what's the potential significance of a price and a meme? Jack shit. It doesn't affect anything. It doesn't affect anyone's lives. It's not meaningful. There's no systemic significance. But there is systemic significance to a product and a service. It offers something to society, and that's meaningful. So, why have we experienced what we experienced yesterday and the day before and over the weekend, in good part, front running? And folks had obviously early information about what Japan was cooking up, and it's all Japan, because Japan is the one of the, if not the remaining largest buyer of the largest export of the United States of America. The largest export of the United States comes out of the United States Treasury Department, which is our debt instruments. It's not a product or a service, it's our debt instruments. Now get past the emotions, get past the social media hyperbole and all of that stuff, and understand that our debt is a product. It is purchased. There is a market. People want it. There's a supply and a demand. You could get into that product being a money, and that money is used to print currency, which is dollars. So that's another story. So Japan is under attack financially because they said they don't want to do yield curve control, and they are going to raise interest rates and become more organic from an interest rate policy standpoint. Now, if they're raising interest rates, that would typically indicate a strengthening currency. It would indicate a reversal of the carry trade, the yen carry trade, where you're able to borrow cheap at negative interest rates in Japan, sell it for dollars, and buy U.S. debt at 5%. Just throw it in a money market at 5 and change percent. So that carry trade is pretty wild. So raising of interest rates in Japan is going to unwind a bit of that carry trade, and the world is known for getting ahead of itself. So if a bit unwinds and a bit too much unwinds, you get that recursive feedback loop that is so well known in economics. Whether that occurs or not, the market will tell us. So right now, with the yen weakening on the heels of a policy statement that there will be increasing rates, that's counterintuitive. It's a contradiction. So there's a couple of ways that may potentially play out. This could be just the last gasp to try and blow up the currency. And then it reverses hard. And then historically, you get very hard reversals. These are massive, massive candles. 147 to 141. These are big candles in currency terms on a daily basis. And that creates a tremendous amount of systemic volatility. And the system really operates on the concept of volatility. When things are calm, people's anxiety is low. They're able to take their time to make decisions. And that's obviously the precursor for markets going up. If you have $100,000 in a bank account and nothing has gone wrong for 6 months, everything is calm, you're like, what the hell am I going to do with the money? I'm going to put it to work. I'm going to start a business. I'm going to buy some assets. But if shit's popping off and every 5 seconds there's a headline about a missile going above head, you're probably going to restrain yourself from pretty much doing anything. That's exactly how financial markets work. Volatility. So a good inspection of volatility is the move indicator. We don't really have a good currency volatility index, which would be very useful. So we could get that inspection from the price action, no less. And the last 2 days for the yen has been extremely volatile. And we've seen that volatility emerge in a very liquidity sensitive market. And look from a Bitcoin and Ethereum perspective, look where we are from a moving average standpoint. Right into the 50 on the daily for Ethereum. Not even close to basically anything on the daily for Bitcoin. Let's see if it smacks anything in the longer time frames. Absolutely not. You have to go down to the 4 hour for Bitcoin to hit the 200 SMA, symmetrical moving average. So there is an expression of increased strength on Bitcoin versus Ethereum. It is imperative to understand that the global financial system could blow up at any time. What does that mean? And how do you process it? How do you digest it? It's real. It's true. It's a managed global financial system where geopolitical powers are enforced and expressed in different ways. Violence is expressed in different ways over and over again. Currency is manipulated either implicitly or just you know expressly or implicitly, like behind the scenes, or just it's blatantly freaking obvious. And it's important to realize that that occurs. And that's the only reason the system continues. Because if the system at this level of an inflated state, and this isn't the consumer price inflation that I'm talking about, the inflated state of the global currency construct, which is really the global debt construct, if there's any volatility episode, the whole system crumbles. So it's a managed environment. It's a managed economy. Now, the reason this is important is because fear indicates that's really a big narrative for Bitcoin. Oh, the fiat system is going to die in a fiery pit and you're going to be left with no money and you can't buy anything. Meanwhile, if the fiat system comes crumbling, your local supermarket doesn't get a shipment because nobody can pay the truck drivers, and Bitcoin doesn't really matter if the supermarket doesn't have any food. So there's a lot of things to consider in that post-apocalyptic scenario. So the fiat system is going to continue longer than any of the shortest time frame catastrophe scenarios could possibly imagine. The demand for dollars is extraordinary. The system is going nowhere. And you have to understand what Brent Johnson has talked about for so many years to really understand why. And the global economy, all these countries around the planet created this dollar system. It wasn't the U.S., it wasn't the Treasury, it wasn't the Federal Reserve, it wasn't Congress. It's partially the U.S. population. The global dollar system are dollars that have been loaned into existence. They weren't printed by the Treasury. And yes, the Fed prints dollars in regards by loaning them into existence. But the vast majority of dollars in the world were printed internationally. Not in the United States, not by the United States, not by Treasury, nor Congress, nor the United States Federal Reserve. They were loaned into existence outside of the United States. When another country issues dollar bonds, when Saudi Arabia says, I want to borrow $1 billion, US dollars, that creates $1 billion worth of debt. And that debt is dollar denominated. They create dollars, and those dollars are poof, manifested into existence. So the world has opted into this system. They are dependent on this system because a debt, you could say it's all going to crash down, and all of a sudden, a new currency is going to be used for settlement. But if some motherfucker owes me $1 billion and the BRICS currency is getting popular, pay me my money in dollars. Motherfucker owes me $1 billion. Pay me. So where do you think this planet is going to head with all of this dollar-denominated debt where it's owed? The vast majority of dollars have an interest rate associated with it, and there's a principal associated with it, and it's owed to somebody. You have to understand the construct of the global financial system to be able to be calm, to engage with whichever market you choose, and I choose the crypto markets. You got to be calm engaging with these markets, understanding the volatility and what it causes, understanding the time horizons in play, and the products and services that are significant above and beyond culturally significant phenomena and the memes that we create. And that's how you sit through a weekend and look at data and think to yourself, that's interesting. What are you going to do about it? And that's why I've constructed the portfolio accordingly. Because I have a very long time horizon. My time horizon is the longest of time horizons. I often say check back in 10 years. So that's why a productive portfolio is nice. I have a check back in 10-year mentality. And over that 10 years, it's going to be productive to varying degrees. And guess what? It's going to be cyclically productive. Ups and downs and lefts and rights. Trending upward along with the secular trend, the long-term trend. Secular means long term. Cyclical means short term, more or less. The cyclicality also gets shorter term in response to volatility because look, the market has a nice bounce today. It'll drive people insane without being able to break down these time periods where the cyclicality plays out and how the cyclicality is encapsulated into the secularity. Bitcoin looks pretty interesting, hitting the 200 SMA in the 4-hour. Let's zoom out because 4-hour is irrelevant. Prices are at a significant premium. If there's any big volatility in the system, you're going to see mean regressions down to what is the weekly? You're talking about 49,000. Fine. Let's say your first stop is 49,000. You see a big blowout in the VIX or the move, and volatility starts to get unhinged. These are your destinations. 10, 20, 30, 40% down, downstrokes. And I'm not interested in buying or selling because I own these things, and where's my cash? My cash is here. And my income from work isn't getting invested. My income from work is used to pay for my capacity to live. So that is a bit of a catch-22 for the early entrants into markets and people that are building their businesses, because you need to have that productivity. And once you get and then you compounding that productivity, you pick your cash flows, and these cash flows, I don't call out specific names because you have to make your own choices. Pick Curve Federation. How many protocols in the Curve Federation have some degree of cash flow? And look at the AMMs, the Forex markets on various networks. We've talked about Ramsey's on Arbitrum. We're talking about Ra up on Fractal at this point. And yesterday I took a position in Thana on Binance Smart Chain. I thought that chart looked pretty interesting. Fib retrace to the 0.15, 0.618 looks actually better from a Gecko terminal standpoint. Same chart, different terminal with a little bit different data. But it turns out the 618 coincided very nicely with price action back in May of 2023, approaching a year ago, 10 months ago. And that's the region in which we find ourselves. So that's a decent retrace from the lows, 0.15. You're about 300% from the lows. In crypto terms, 300% from the lows isn't much. And it's not like 300% talking about an equity going 300%. 300% is like, all right, it's off the bottom. And it's just getting started and people are figuring out what it is. We're talking about an 11 mil market cap protocol. I'd also like exposure to Arrow, but I don't have this kind of setup as well. I mean, it's literally at 270 mil market cap and you don't have the retrace. You just don't. It's way past the retrace. So whoopie-doo, I can't get exposure to it. It goes 1000x on the money. I didn't buy it for rational reasons. Great. Move on to the next thing. What else was I looking at? Actually, that's what I was looking at over there. Let's go back to TradingView. Joe, I thought was at a decent spot as well. I wanted exposure to Avalanche. I found this level pretty interesting. Higher low structurally coming off December 22 lows. Joe's been around since last cycle. Joe is the king of the hill on Avalanche. Pays 10%, which will obviously is proportional to network activity and inversely proportional to the cost of the Joe asset. And I think this is an interesting spot. Rejection, rejection, break, higher low from the bottom. It's consistent somewhat with an ascending triangle, maybe some sort of other technical pattern someone may see in their crystal ball. Generally speaking, break above the 50 SMA on the weekly, discount, premium, mean regress, no significant discount to the downside, support on the 50 SMA, break to the upside through the ceiling. Looks comforting that this is a region of significant ownership. It'll be very hard to get below the 50 SMA because it was very hard to get below the 50 SMA to such a degree that it didn't go below the 50 SMA. And it printed higher lows in an extremely distressed time, period in 23, our final dip before this upward move. It was not able to break lows from January of 23, which is coming off the heels of the bear cycle, so to speak. No fresh lower lows, breaking to the higher highs, bit of an inverse head and shoulders as well, if you notice. Left, head, right, break. So that makes good sense there. Anywho, I'm going to get to your comments. Solana, you want the rational interpretation of Solana? I like it. It's a big deal. We need a new network. We need something that's next, and Solana's next after what Ethereum did, and the L2s are hot, and Avalanche is there, and and Optimism and Arbitrum L2s, and Phantom's going to do some interesting things. That's coming off a bit of complexity of its history and multi-chain. which was a big blow up and a lot of bad press. I mean, basically, what happened on Phantom is just as bad of press as what played out with Abracadabra. And look what's right down on the list, right? Spell. This thing looks great from a technical standpoint. And this, ironically, didn't print lower lows because this is where it all started. It all started at about 0.0004. And that's where this chart does not have data back to where it was, but way before this blow off frenzy top into the multi-cent region, it started down here. Chart looks great. It was a full regression. All that was given was taken back. And now it starts its trend again. And break out to the upside on the weekly 100 SMA. And let's see where bottom is. I wouldn't be surprised for it to bounce off the 100 or maybe even higher, the 10 SMA. Go out to the monthly, way above the time weighted average price. Monthly perspective is my preferred perspective. Some of the assets we look at don't have that kind of time history to be able to inspect from a monthly perspective. Certainly have a time weighted average price here, break from the downside to the upside, maybe get a retest, and that would be a significant dip. And that would indicate a potential discount, especially if it holds. You're not going to get a discount down here necessarily. In the end, the chart tells you what the truth is. Monthly perspective, look at that, smack right into the time weighted average price for Joe. Very strong chart from a monthly perspective. From a monthly perspective, this is barely a dip below the time weighted average price. Now, the complexity here from an emotional standpoint is look at the time frame. It's literally 4 months. But you have to have this very long-term time frame to be able to have these types of interpretations of the data. Solana on the monthly broke to you didn't even get a mean regression to the time weighted average price. Now you might get a mean regression and it might be up here, up at 80 in the next 3 months, 4 months, or whatever. And that'd be healthy. It's healthy to get a mean regression and to find support on a moving average without deviation below that moving average, because that's an expression of interest. That's an expression of support. Price action continuing to move upward on such mean regressions. Let's see where AVAX is. AVAX, I mean, they all look the same. All the damn charts look the same. Break of the time weighted average price on the monthly to the upside. So all these charts look healthy. Now, that's why you look for macro to see if there's any mean regressions in store. But the directionality is clear. All the exuberance that was created between end of 21 and the last innings of 22 where stuff bottomed, where basically everything bottomed, was all flushed. And now is a new cycle, a fresh cycle. This is a full business cycle. The reason this is a very different market to understand as compared to equities because this type of cycle does not occur in equities anymore. It cannot occur, one, for political reasons, political optics, and two, because of the way employment has been baked into the cake of the equities markets, the 401k, the passive flows, the flows that just buy no matter what, with no rhyme or reason. They just pile into the hottest piece of shit in town. Let's buy that shit that's up 3, 4, 500%. Why? Because it's in the 401k. Yeah, okay. But that is what creates that just trend upward. I mean, we look at a lot of data from crypto and we see the cyclicality and the mean regressions. We don't really look at stocks too much. And you have to go out to a higher time frame because there's so much more history. But look, there's your mean regressions. And isn't it obvious? Mean regression. Mean regression. I mean, literally, there was a big deviation to the downside for 2008. And that's when they started to manage things, the managed currency regime, in a much more aggressive fashion, where the mean regressions deviate to the downside much less. And if you look at NASDAQ, it's even more pronounced. There was even a higher low. Is that the case? It was a lower low in 2008. That was pretty bad for S&P, and that's non-tech industry. It's a lower low, but in Nasdaq in 2008, it was a higher low. This chart in 2008 looked good if you had the type of inspection capacity that I offer nowadays. And I wasn't looking at these charts back in 2008 the way I do now. I wasn't even looking at these damn charts. I was barely out of college at that point. So look at these passive flows. Well, these 401ks that just dump money into the same shit over and over again. 2020 didn't even break the 3-month time weighted average price to the downside. As we've talked about, this is a strong mean regression. There wasn't even a deviation to the downside. That's how much buy pressure there was. So from a traditional financial perspective, it's NASDAQ that outperforms. But you're not getting the multiples. How many trillions and trillions and trillions and trillions of dollars of allocation is required to get multiples of this stupid chart? You're late. If you invested in the 90s, you're good. If you invested even earlier, even better. We're late. You're not a millennial investing in this shit. And dare I even talk about the younger generations. You're not getting anywhere with this stuff. So you have to understand where the opportunity is in markets, and that's why all roads do point to crypto from an opportunity standpoint. You're talking to the oldest millennial here. I'm 40 at the, oh shit, I'm 41. So damn old. So old. Oldest millennial, and this is where the opportunity is. I don't care. I don't care any of the social media narratives or what the old boomers say. These are financial products and services, and they're the most interesting financial products and services I've ever seen. Because all I want to do is own a bank. That's what this shit is. You're owning a bank. This is literally a bank. You're literally staring at the brief history. Literally, it's a couple of years, which is nothing in a matter of time. Speak. It's a bank in cyberspace that does foreign exchange. Oh my God, that's crazy. Has all nice memes associated with it, and if any of the foreign exchange products do memeing well, it's Trader Joe. They got great memes, great graphics. You know who I miss? Beethoven on Phantom. They always had great art. That was great stuff. I hope Phantom picks up steam. I think it's gonna pick up steam. Let's go over to Phantom real quick. Check volume first, because that's where the feistiness is. And the volume's up big. That's a big volume increase, 91%. Coming off the heels of Avalanche, which was over. It was at 140% right last week. Still at 78%. That's big numbers. Where everything else is marginal, if not negative. Negative volume week over week on Arbitrum. Base at 40%. Base is hot. Optimism, I think, is marginally positive at 12.1%. Let's check Ethereum, 3%. It's such a large capital base. It's 3% on 70 something billion dollars is a whole nother level of financial activity. Checking in on stables, we'll go over to Phantom. 17% positive sum environment. You know what that does for price action in a $500 million economy? Oh my God. Wow, 13.59% change on a $2.8 billion economy. That's crazy. Positive sum, at least it's freaking positive sum. 2.5 bill at Arbitrum. Polygon marginally negative sum. Avalanche marginally positive sum. Optimism hanging out around 715. $77 billion. That's a large economy. Now, in the global nation state scale of things, it's zero. That's why the opportunity is here. But this is like Switzerland opening up to the whole world. This is a nation state of no nation state accessible to all nation states with $77 billion. This is nascent. This is the beginning of the beginning. It hasn't started yet. It hasn't even gotten off the ground. This is startup mode, baby. So that's why I have that 10-year time horizon. This is early. But you still don't want to pay someone 10x for their bag. So you still want to buy at a discount. You still want to buy not at a premium. Got to avoid those damn premiums. Sarko's in the house. Would be good to talk about making an entry versus time horizon. Goal to have cash flow to replace my income in 2028, then buying a suitable token based on XYZ. Now is not expensive. True. Now, a big consideration that I think about is the macro low. So you might have your cyclical lows. Let's look at Theta, for instance. I mean, look how new this damn thing is. Very hard to get a sense of where these things are going to head into end of 25 into 26 and the real cyclical bear market. Because you'll be coming off the heels of the bull market. When you're coming off the heels of a bull market, and we're not even into the capital expansion cycle, you squishing down these damn charts and you get your big rips to the upside. And then it crashes to $4. Like literally, don't take this as an example for Thana, but this is an example for the whole ecosystem. You go to 500 and then you crash down to like $1, $2. That's how cyclical these damn markets will be. So, all right, fine. 300%, 400%. You find yourself at the bottom of 2024. Those are big numbers. 400%. You don't get 400% investing in QQQ. You're not getting it in the S&P. It doesn't work like that anymore. And plus, I rather own these products because they're paying the entire time. They're paying the entire bull market. They're paying the entire bear market. Bitcoin is a great example of really some good expectations to have. Let's take off logarithmic mode, reset our scale. I mean, look at that exuberance. But you got to understand, this is the market we had. We were coming into 2020 with a market that looked like this. It was like, look at this blow off top. It was through the roof. And this was our earlier market in 16, 17 and earlier. And then all this shit happened in 18. Wow. That was big price action. You never thought it was going to get bigger than that. 20,000. And then, oh my lord, it turns out to be tiny. Jumbo price action. So, when they print 100 to 500 trillion dollars heading into the end of 2025, my expectation is roughly something like this. Like ridiculous price action, probably goes to $250,000, and then the crash is down to probably where we are right now, into the 60s. Maybe higher because you end up crashing below the previous all-time high a little bit. At least that's what happened in 2020, the end of 2022. So let's say you crash into the 60s. Guess what? 60s is 400%, 400% off the lows in 2022. 400%. That is a massive gain. So the exuberance, chop it off, kill it. It's all bullshit. All the exuberance. Measure from the lows, and that is where your comfort zone is. The next structural lower low is higher than where you're at. Can't argue it's a decent discount. So you're speculating on where the next structural lower, not lower low, but where the next cyclical low is going to be at the depths of the bear market. And in that regard, you could, and then you ask how much of a premium are you willing to pay from the current low, local low? Are you willing to pay a 400% premium? Because someone was able to buy at 75% less of a price point. All right, so I'm willing to pay maybe two, three, 400% off the lows because now I have a bit of a confirmation. Maybe there's a technical setup that say up from here. I'm not really willing to pay 6, 7, 8, 9, 10x that someone else paid because then that's going to significantly have a negative effect on my position size. And I'm probably better off identifying something else or waiting for some sort of technical setup that offers a more favorable condition, or maybe just not doing anything. You don't have to buy things. You don't have to spend money. Hope that helps. Um, but XYZ is really the foundation of everything. When you're buying anything, isn't that the most important calculation? How much does it cost? How much is it paying? And how likely is it going to continue to pay? And what happens is you realize probably over diversifying a lot, folks. If one protocol is paying 30%, another protocol is paying 30%, and another protocol is paying 30%, they're all paying the same thing. So what matters is Z. How likely that same thing is to continue paying the same thing. And obviously in crypto, X can go multiples, and hopefully that Y runs the same. So if your X goes 10X on the money and Y remains unchanged, which it can, because in crypto, yield is not necessarily inversely proportional to price because it's proportional to protocol activity. It's actually real cash flow. Not waiting for a board of directors to give you the scrap left over as a dividend. Tapsy's in the house. Yo, yo. Sarko, that discussion will be helpful for new persons hearing you for the first time say you're buying at a premium. The concept of expectations is used, in my opinion. I hope a lot of what I discussed helps Asarco, and I know a lot of what I discuss is redundant, but as you say, new persons. And a lot of what I need to talk about every stream is geared to new persons because we have a relatively small community and there will always be new. So, I fold together a bit of current events, a bit of macroeconomic structure where we are, and obviously these foundational uh, arguments that we discuss and have built over the years. Diego, hey, time in the market or time in the market? Time in the market and time in the market is important from an entry standpoint. And I subscribe to basically Buffett methodology. You want to buy shit that's distressed, shit that's mispriced, shit that people don't believe in, but they don't believe in it because they're irrational. You need to understand the vast majority of price action tends to behave rationally. Not with meme coins, that's a rational price action, but with businesses, most are inspecting these things from a decent, rational perspective. Most of the market participants are completely irrational. These are just expectations. And when you understand and accept these realities, you're at least able to formulate and respond to them constructively and make good decisions based on the real way the real world works. People are crazy. I don't trust people. Now, that's a stereotypical statement, but broadly, it's a reasonable statement. And I favor software. If software is shown to work, it will continue to work into the future, and it can be trusted to work because the software does not change. That's a big deal because that's not the way humans are. Humans can be trusted today and not trusted in the future. But that's not the way an immutable, an unchangeable piece of software is. It's a different paradigm. It changes everything. Topsy laughing my ass off in a work call, and I hear your stream start in the background. Got very confused for a sec. I make it onto work calls. You see, maybe one day you're in the office and you hear me screaming from the other end of the room because someone has their speaker on and it's not headphones and it's 11:30 a.m. ladies and gentlemen of the crypto space. And, eventually, hopefully, the community will be that big. That'd be fun. That'd be fun. Good stories. Snoke, aye, Captain. Hey, hey. Still waiting and learning as much as possible. The most important thing is to be comfortable. You have to live with your decisions. And that's the worst expectation that people have is when they get a meme coin and they think they're going to be rich, and clearly the expectation for the vast majority is not achieved. They end up poor and losing their money. How many of those coin fashions do you see pass by on X, your stream, where people lose everything? Get a loan using leverage, but they just made poor choices. And poor choice isn't necessarily bad. You can make money with meme coins, but it's your expectations. So here's an interesting one with regard to expectations. If you expect the market to go down and it goes down, you were right. So you met your expectation. If you expect the market to go down and it goes up, you didn't meet your expectation, but fuck that, the market went up. That's a good thing. Expect the market to go down always, and then you'll always be good. Either met your expectation or you're disappointed in a good way. Oh, damn it, the market went down. It went up. It's good. So if you expect it to always go down, up here, you're going to develop a sustainable mentality, a way to let time pass and be comfortable with everything. Time and the passage of time is the secret to capital management. And that all starts up here with finding a capacity to let the time pass while being comfortable. F Foundation under investigation, everyone's under investigation. I am not aligned with Ethereum. That might be a common mistake given that people closely associate smart contracts with Ethereum. I align with immutable deterministic smart contracts that have been constructed in such a way to build financial products and services. Now, historically, those immutable smart contracts were published on Ethereum mainnet, but in late 2021, really started the seamless cross-chain interoperability narrative, and you're able to move capital from emerging market to emerging market, and the EVM has won. It's the dominant contract or virtual machine structure, and pretty much Solidity has won, and Viper, which is a Pythonified Solidity, that has won. It is dominant. Therefore, these networks, these emerging markets, are compatible with one another. They're interoperable, and they're quickly becoming uh, seamless Lego pieces across these chains, which is quite technologically extraordinary. So you have Ethereum as a spending cash to interact with these markets. I put it in the cash part of the portfolio, and I have no allegiance to it whatsoever. I will redenominate in another cash, be it a dollar, of which there's a variety of choices, a Bitcoin, an AVAX, an FTM, an Atom, a TIA, Dimension, in 5 years when they actually start to stabilize and they're less volatile. A cash, which needs to be respected from an FX portfolio management perspective. The bad guy. Good morning, Cap. Checking in. No question today. Just gratitude for your time. Always a pleasure. I try and do the stream as much as I can and as consistent as I can. Hallucians in the house. Incoomer. I know I'm a horrible, horrible incoomer. How dare I look at this space rationally? How dare I look at this space as a business and an emerging market? Ooh, dirty incoomer. The evolution of the dividend investor. Cleave's a big deal, Max. Premium discount. Can you own a significant part of supply? I've looked at Aladdin for a long time. F of N's a big deal. It's going to grow. Deal with stablecoins. They have some of the most dominant convex voting power in the entire space. Nipping at the heels of Frax. Woo, that's a big deal. XYZ. How much does it cost? How much is it paying? And how likely is it to continue paying in the future? All those things check out. You need some other puzzle pieces. Part of the Curve Federation. Plenty of other things in the Curve Federation do that. And I have excessively allocated to the Curve Federation, and I've been diversifying for years at this point. So that's why I get the Joe, I get the Thana, I get the Ramses, and I want exposure to other networks. This is not just Curve Federation. Curve Federation is established, it's moated, has its momentum. History shows that the leader does not get disrupted. CRVUSD has changed everything, in my opinion. I think it stands out, and a lot of people think not as I do. But fortunately, I am me, and I like my opinions. So I favor my opinions over other people. Now, other people's opinions do affect my opinion, and I adjust quite often, but that's what I believe. So I like the Curve Federation, of which Aladdin products are completely integrated and closely aligned. So I chose for concentrator as beta exposure to F of N, and as ALD, tokenomics are revamped. Fixed supply, Dow forms, and cash flow of F of N starts to filter through the overall Aladdin ecosystem. I have my exposure. I think in terms of exposure. Do I have either direct exposure or indirect exposure? I mean, technically, we all have indirect exposure to the whole space. So what you want is to identify opportunity for more concentrated exposure to individual components of these emerging markets. So that was my choice. And you have indirect exposure to F of N or pick any of the components of the Federation vis-a-vis Curve. And frankly, it's all interconnected. And once you start to visualize this cash flow through this system, you don't need redundant exposure or unnecessary redundant exposure. Historically, folks excessively diversify and they have like 10, 15 tokens, and it's literally the same exact narrative over and over again, and they could have concentrated more and done better with increased concentration. So I opted for some exposure to CTR as a beta for F of N, and that's clearly closely related to Cleve because where do you think the convex voting power comes from for F of N? Comes from Cleve, because it's an Aladdin product. So there's my thoughts. Cleve has no pass-through um, vote rental fees, so there's no cash flow in that regard. So it's not it doesn't offer certain things that I like in other protocols, and maybe that's what the future is for Cleve voting power. I don't know. Maybe it ends up being more important from an F event standpoint, which has voting rights and pass through, and there's cash flow for FXN at this point. But that's not CVX voting power, VLCVX, which is at the Cleve level. So, you know, generally speaking, you don't need exposure to all the tokens of the Aladdin ecosystem to have exposure to the Aladdin ecosystem. And in fact, you don't need exposure to the Aladdin ecosystem to have exposure to the Aladdin ecosystem. It's part of the Curve Federation, and it's all connected. And all the downstream protocols support the core of the Federation because the downstream protocols are existentially dependent on the robustness and success of the core protocol. So they will fight to protect it because their survival is dependent on it. It's like the queen bee, or pick your metaphor, the king. You protect the core of the system. And that's what's playing out from a financial standpoint with these protocols. Hope that helps. Cleve now getting burbs from Paladin because VLCVX can't vote for FXN bribes, going to integrate into Cleve. Yes, of course. Well, the best yields. Yeah, that's what we've been doing for years with Paladin, and that's what we've been doing for years with Vote Market. And there's plenty of other protocols that are paying cash flow, and what you end up having is a competitive market. And the best part is, y'all thinking today. Many of you may be thinking a week from today. Some of you may be thinking a month. Fewer of you are thinking a year from today. And this crazy guy's thinking 5 years from today or 10 years from today. Now, what happens when there's a million new protocols 10 years from now and Vote Market has 20,000 vote rentals to choose from and Paladin has another 20,000 vote rentals to choose from? So today seems to be not so interesting relative to where things are probably going to be over a long enough period of time. That'd be pretty crazy. Which one of these 20,000 protocols that are paying hand over fist for voting rights am I going to choose for income this week? Interesting stuff. What about buying ETH at this price point? ETF approval, capital inflows, ETH's a cash. So it's an FX arbitrage. You could play it, but how do you capitalize on it? I mean, you get 4 or 5% from a staking perspective. 4 or 5% doesn't do much from a cash flow perspective. You might as well go to bonds. But you get your asymmetric appreciation. All right, fine. The beauty of Ethereum is your 4 or 5% is 4 or 5%, even if Ethereum goes 10x on the money, because it's denominated in Ethereum. But 4 or 5%, not so interesting to me. I want greater returns. In an environment where the risk-free rate of return is likely to be above 3.5, 4% at the federal government level, the U.S. federal government, I'm much more interested in 10, 15, 20 and greater percent APR. 10, interesting, double risk-free, interesting. 15, getting interesting-er. 20, now you're getting interesting. 25, can I have a 30? Do I hear a 30? Do I hear a 30? Now you're getting interesting, and there's a lot of 20, 30% from a cash flow perspective from a vote rental standpoint. But that really requires digesting principal appreciation and purchases versus positions. I'm very fond of that perspective of a purchase. Would you buy something? Would you buy an Ethereum if you can never, ever, ever, ever sell it and it's worthless? You can't sell it, and you would only get 5% on the money. You technologically couldn't sell it, which means you had $10,000. You no longer have $10,000 for the rest of your life. It's gone. It's like going into Best Buy and you bought a computer. You'll never get your money back ever. But in this instance, instead of going in to buy a computer, you're going in to buy $50 a week. Just bought $50 a week. Just bought $100 a week. You just bought $1,000 a week. You just bought $5,000 a week. So that's what I want to be my reality. I want to think in terms of buying income. It's not a position to sell. I want to buy income, earn a salary, and buy more income, which earns a salary, and use that income to have savings, to buy more income, to pay my bills. And that's the simplified perspective I offer to look through the insanity of crypto markets. The cycle. I gotta sell it. I gotta sell it before everyone else does. I gotta be in earlier. I gotta buy it before everyone else. I gotta drive myself nuts with the anxiety. I bought $100 worth of WIF and it's worth $10 million. When do I sell it? I gotta sell it before everyone else. And then I gotta pay capital gains and you're fucked. All right, don't pay capital gains and you're really fucked. I don't like that. It's disgusting. It's gross. It's icky. It's icky. Makes you feel naughty. And there's got to be a better way. It's got to be an adult way, a grown-up way, an older way of looking at markets. And that's really that of a dividend investor. Except in these markets, the dividend investor isn't fucked over by the corporate board. You have no chance in hell of making it in traditional finance. But you can make it here. And I know you can make it here because I've made it here. And I, well, it's hard because it's geographically sensitive and it's also starting capital sensitive. Back in like 2019, I started with about 100. Put that into perspective, and put that into perspective with regard to expectations and needs. If you're in Central Africa and you have a 10 chip and you need a tenth of the amount of potential capital on a monthly basis, all right. If you're in South America and it costs $1,000 a month for everything, all right. There's plenty of places on the planet where you don't need $150,000 a year in income to be middle class, like in America. So all of the starting capital requirements are relative, and that's important to factor into the equation. It's got to be a better way. Everyone doesn't have to run around being a degenerate, insane gambler to make something of themselves. We can look at these markets as a grown ass adult and be responsible and be smart about things. Um, where are we going? Lucian, how do you decide what chains you want to be exposed to? I imagine it's a combination of stable inflows to chains and discounts and protocols with good XYD. Yes, uh, that's it. Flows of capital are observed on DeFi Llama. Stable section overview. You're probably able to get a forward-looking indicator of potential flows from the volumes page. Because clearly, if you have a 30, 40%, 50%, 100% rip on volume, that's going to cause a fair amount of capital flows from the big chains to another chain. $100 million worth of flows into optimism is going to cause a lot of activity. Flows, cross-border flows. So the DeFi Llama is completely invaluable to get a sense of where things are hot. I generally don't have the highest opinion of the Optimism network. Has very low volume and very low capital. But that's still a lot of capital, $715 million. So what happens is a hierarchy. And the hierarchy is right here. Ethereum has all the money. Tron's not really, it's not really relevant to products and services, banking products and services in the way we inspect. Binance Smart Chain has the most out of all the Ethereum L2s and Solana. It's the king of the hill for capital. Solana's been hot with volume. Meme coin frenzy, not necessarily the same infrastructure. It's lagging Ethereum and the L2s for that matter, and Avalanche and Phantom, and frankly Cosmos hubs in financial infrastructure products and services. But I think that's interesting. And the exposure I opt for there is Hero Network. Arbitrum's down the list at 259 bill, so that's basically the best expression of Ethereum capital availability, dollar availability. I think there's going to be a lot of activity in Arbitrum, especially with the recent Duncan upgrade that basically killed gas prices. It's basically pennies to operate on the network at this point, and it's basically free to operate on Optimism, but it just doesn't. It's behind. It's lagging. So give it a cycle. Check back in 4 years, and it'll be an interesting story. Polygon's kind of mid-cycle reminds me of Polygon and Avalanche fall into the same bucket from a liquidity depth standpoint. 1.45 bill, 1.37 bill. Two very interesting networks. Two very interesting, interested demographics. Polygon is a hell of a story from an India perspective, and Avalanche has a lot of corporate interest and it's very interesting network. And they all have their subnet type of implementation. And it's not just optimism that's the super chain. Arbitrum has its intentions and technological offerings, and so does Avalanche. Phantom Sonic is very interesting. Microchain falls into the base category, really, albeit base is part of the superchain network narrative. But 500 mil compared to base at 497, and Optimism's a little bit ahead at 700 and change. Everything else is microscopic. Sui, Kava, Gnosis is interesting. They want to do payments. I would say they're like security or multi-sig compartmentalization, very wallet oriented is what Gnosis is doing. And obviously you have the whole Cosmos Hub networks, Terra Classic, all this shit is on Cosmos Hubs and Sui, Kava, and Near's unto itself. Near's data availability has greater data availability than Celestia. I believe I'm speaking of the correct network that I'm thinking of. So that's a big deal. 151 mil, very interesting. But if you go over to volume, you won't see the DeFi infrastructure. You won't see the exchanges and the credit facilities. So that's how I think about these types of networks. Fractal, I don't think has. No, it doesn't have data like that yet. It's like a week old. But the incentive percentages that are going to be thrown around, especially with the FXTL points, could be very interesting. So how do you get capital to flow? Capital flows because of percentage signs. So you're throwing around 1,000%, it's going to garner some attention. And how do you? It's interesting how these 1,000% manifest and who's interested in them. But they're real. It's 1,000%. Doesn't mean it's not going to get diluted really quick. It doesn't mean you don't necessarily have work to do with regard to concentrated liquidity positions. And it also doesn't mean you're going to be able to use it if you're throwing around a fair amount of capital. You're throwing around $100,000 into $1 million pool. It's probably not at 1,000%, especially after you start to engage with the LP position. Hope that helps. Snoke, my man, you're very welcome. Killis, good morning, Killis. Benaruga, where do you keep your dry powder? DLP? No, I do not LP, albeit I throw around LPs every now and then, like my entire Prisma position is from LP. I have micro LPs on Fractal because whatever, I was like the first person to throw capital on Fractal. So you got a bunch of FXTL points that are coming this week. That's pretty cool. I look forward to that. Um, uh, Bitcoin, Ethereum, stablecoins, USDC, frankly, CRV USD at this point. That's very comfortable. Frax, stablecoins, dollars, Bitcoin, Ethereum, not much Sol. I mean, Sol has obviously been outperforming, and it's literally by the end of this market cycle, it's probably going to run 100x from bottom to trough to peak. But I just don't need exposure to it. Solana still is a bit isolated. There's great and very effective cross-chain infrastructure at this point that goes over to Solana and frankly Cosmos hubs for that matter. There were years where we couldn't get capital in and out of Cosmos hubs, but nowadays ThorSwap just does it boom like that, like magic. So it's come a long way. You all don't know what you have. Y'all don't know what you have. The technology and the systems. We couldn't do shit back in 2020 and 21. I remember when Arbitrum launched and there was nothing other than Ethereum mainnet. Then again, I also remember when Ethereum launched and $30 Ethereum was crazy. So old man stories could go on for a long time. Snoke, what about Fraxtal? I hope that helped. I am interested in Fraxtal. I have a very uh, large alignment with what they're building there, and price doesn't mean much. I think what they're building is very interesting. To limit drawdown, there is no limiting of drawdown. There's only volatility, and there's volatility in everything. If you look at the price of a dollar versus the Japanese yen, the price of the dollar is very volatile. Let's pull up a different chart other than yen dollar denominated. It's yen USD. Can we do it? JPY USD. Oh, we could invert it. So JPY USD, and let's go like this. Dollar's a very volatile asset. If you're in Japan, dollar's getting pretty expensive. Food for thought. Is this the expression I'm looking for? You know what I'm saying? The yen's getting cheap, dollar's getting expensive. But if we go over here, maybe that's not what I'm looking for. JPY. It's not one divided by whatever. My point. Yeah, oh, here. This is so the yen is looking cheap compared to the dollar. So FX is it's a relative game. And then that's the same thing for Bitcoin and Ethereum and gas tokens, stuff that you could sell. They're not investments. It's a forex position. It's a cash position, and it's always to be traded. Look, this is relative to the dollar. These, if you invert it, it gives you a very different perspective. So the dollar has been depreciating against Bitcoin, but check it out. And I point to this, and it annoys the crap out of people. But the dollar goes up against Bitcoin. It rallies hard against Bitcoin. The dollar rallied 343% against Bitcoin. The dollar outperformed the shit out of Bitcoin between 2022 and basically in 2022, from end of November 2021 to November of 2022. For 1 year, the dollar rallied hard against Bitcoin. Perspective, FX, foreign exchange, and their spreads. The currencies are relative. Hope that helps. Uh, Dan, to be honest, between stablecoin FUD and now this ETH issue, Frax will have quite a hard time avoiding the SEC's eye at some point. Frax, FRXE, Sam saying the Telegram that FXS is value accrual. I think you're right. So that's a major consideration with regard to exposure. Um, Not an easy answer to such an observation that's completely reasonable. So size accordingly. Risk reward, not easy choices. Complicated to navigate this space. There's not much else to say. You said it very well. And we'll see what plays out. Kill us. Yes, kids nowadays got it easy. Oh, they got it easy. They got it so easy. And but it's a different world. And it's hard to see what's going on because I have my own kids and it's only going to get weirder in 10 years. Ladies and gentlemen of the crypto space, we were live on a Wednesday, March 20th at 12:48 p.m. I thank you all for joining me today. Tell everybody to subscribe. Link in the description on YouTube to the most rational community in the entire crypto space. I'm putting some finishing touches on crypto payments for Discord, so I'll post that on X, and people, if they want to join, they could join and participate with a very old school veteran group of persons that have been engaging in this market since the early days of 2021 at this point. Survivors, so to speak. And I will see you guys later this week. Thank you for joining. Peace.